They need it yesterday, kind of like myself. I just want it. And for me, that's why I love individual accounts. Hey everyone, this is Ian from ppcian.com. I am back with another video about dividend growth investing. So today I am broadcasting from Maui, Hawaii. I am here on the beautiful Kaanapali Beach. I am staying at the Westin Villas on a vacation with my family, and I thought I would shoot a dividend video here from this beautiful, beautiful beach. Now, today's video, the topic of today's video is retirement accounts, individual accounts. Which one makes the most sense for dividend investors? Should one place their money in individual accounts? Should one take advantage of retirement accounts? Now, when I was on the airplane over here to Maui, I went ahead and I jotted down some notes in my notebook. And so I can't refer to my notebook right now because I'm actually using a selfie stick to film this video. So I'm doing my best here with the camera equipment that I have. But I did want to make sure to film this video because I think it's an important one. I've been receiving a lot of questions on my channel here on PPCE about this very question. And so I thought it was time to film this video. And so please excuse the shakiness of the camera, the selfie stick. I am doing my best here, but I hope the scenery, the beautiful beach here at Kaanapali Beach makes up for that. And I hope you enjoy the content of today's video. So let's just start with the basics. You have to first ask yourself the question, when do you plan on retiring? When do you plan on also using your income from your dividends? Do you want to experience an early retirement? Do you want to tap into your dividend income when you're still younger? Do you want to use dividend income maybe to supplement your living expenses before you're of age 65? That's the key question. In my personal situation, that is what I am all about. I absolutely want to be able to tap into my dividend income before I'm 65. Now, I don't know if I'm going to want to retire early. Maybe I will, maybe I won't. I definitely want to take more vacations like this one. I definitely want to enjoy the beautiful Kaanapali Beach more, a lot more. Will I completely retire before I'm 65? I don't know, but I want flexibility, and quite frankly, more than anything, I want the security that comes with financial freedom. And what does financial freedom mean? It basically means that I have enough dividends coming in, cash flow, that surpasses my living expenses. And so that is the beauty of financial freedom. I will have an abundance of cash flow, dividends, checks from companies that come in quarterly from each company, sometimes monthly for some of the stocks I own, or at least one of the stocks I own. Surpass all of my living expenses. I want that to happen as soon as possible because I want the security that comes with that and the flexibility that comes with that. Now, obviously I'm not 65 yet. I've got quite a ways to go. I'm in my 30s. And so for me, it makes a lot of sense to leverage individual accounts. Individual accounts make a lot of sense because they give that flexibility. And so the fact of the matter, though, is individual accounts come with some disadvantages. I would say the main disadvantage is they're fully taxable. Now, the beauty of dividend growth investing is it's a very tax-effective strategy. Very tax effective. And so you're not trading a lot, you're buying, you're holding forever. You're going to pay taxes on the dividends as they come in, but they're taxed at a lower rate. Typically for many dividends or most dividends that come in. However, they are taxed. And if you reinvest the dividends, you're compounding the dividends, there are some tax implications. Now let's look at retirement vehicles. My favorite retirement vehicle is a Roth style vehicle. You've often heard of the Roth IRA probably as being a really popular one. Roth means that you pay the taxes, you pay them up front on your earned income. Once the income goes in the vehicle, it's not taxed anymore, so it can compound tax-free. Now, the amazing thing about this is tax-free growth over 30 years. That's huge. And I love Roth vehicles for one very reason. You don't know what the tax rate's going to be in 30 years when you need the money. You have no idea. I don't know. One thing I do know is in the United States, there's a lot of debt. Our country is in debt. The debt keeps going up. I also know in the United States, our tax rates are amongst the lowest in the entire developed world. And so foreseeably, I wouldn't be surprised if tax rates go up over time. And so what's great about the Roth is you're paying the taxes now, then it can just keep growing. Now let's contrast that with the 401k style retirement vehicles. If you work at a large employer, many large employers offer what's called the 401k. Now the challenge with this is you're putting in money pre-tax. So that's great. It might reduce your tax bill in the short run. But in the long run, the challenge is you take your money out in 30 years, who knows what the tax rate will be. It could be sky high if our country is facing challenges, tax rate has gone through the roof. We have to fund all of these programs, all of the national debt, all of the, there's a demographic reality here that the baby boomer generation is aging. They're all aging. They're becoming retirees. And so they're not producing income anymore, and they're starting to use programs like Medicare, for example, and Social Security. And so the challenge is with a 401k style vehicle, who knows in 30 years what's going to happen to the tax rates when you want to take your money out. Now, the one thing I do like about a 401k is many employers offer what's called a match. What this means is it's free money. You put in $1, they put in $1. It's 100% return, risk-free, for free. Typically, if you work at a company, they offer a match. If I were in that situation, I would take advantage of the full match. You can't give up a 100% risk-free return via a match. That's just pure gold. So here's the deal. When it comes down to it, I think it's a balancing act. I think it's an act of balancing. And I think it comes up to each person what their goals are around when they want to retire, what they think about financial freedom. If they need the cash flow now, they need it yesterday, kind of like myself. I just want it. And for me, that's why I love individual accounts. However, not everyone is like that. Maybe you're in a situation where you just want to maximize returns, minimize taxes. There are cases where retirement accounts might make sense. Now, one thing I do want to also say about retirement accounts, options can sometimes be limited. So if you have a retirement account, what if it does not allow you to buy individual stocks? What if it only offers mutual funds? In my opinion, that's a deal breaker for me. The only case where it's not a deal breaker would probably be a 401k that offered a match, because it's 100% risk-free return. Even if I could only put it in mutual funds or cash, 100% is 100%. So that's just something that I would think about with retirement accounts. For me, it's really important to own individual dividend-paying stocks. And so again, if the retirement accounts didn't offer that, that's oftentimes a deal breaker. But what it comes down to, what I was going back to, is balance. Every person is going to have a different answer. And think about percentages. Do you want 10% in this one, 20% in the Roth, 70% in the individual? Do you want it flipped around? It comes down to each person's unique preferences, unique situation. Again, for myself, I'm optimizing towards early retirement. I'm optimizing towards financial freedom now, right now. So this is Ian Lopuck from ppcian.com. Thank you so much for watching. I am broadcasting here from beautiful Kaanapali Beach in Maui, Hawaii. Thank you for joining me today. Before I leave, as a friendly disclaimer, this is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. This is my passion. I love investing for dividends. Even while I'm on vacation, I'm thinking about it every day. And if you are going to go out and invest in the stock market or financial instruments, please do consult a licensed financial advisor first. Thank you so much for watching. If you enjoyed today's video, I please invite you to like the video, to subscribe, to comment. All of that means the world to me. It's the best way that you can thank me for what I'm doing. This is Ian Lopuck. I will see you in the next dividend investing video.